So yeah, people always think, especially since we're investors, because we want to get huge returns, right? That's what our goal is. You have to take it out of your brain of what you want. Like I wouldn't do it for a 6 to 8% return. Well, you're not a freaking doctor that's making $300,000 a year. There's not many places to put your money, right?
Yeah.
You're the prize at the end of the day. Now markets will change and maybe we won't be the prize at some point, but right now we are. What's going on, Real Dealz podcast listeners? I'm coming at you with show 382. This week was a cool show. We had Dan Haberkost on the show, and he randomly had sent me a message on Facebook saying he really enjoyed listening to the podcast and wanted to give me some feedback of what he liked on the show. And I'm like, talking to him a little bit, and I was like, hey, you want to come on the show? Because it seemed like he was doing some cool stuff. And we kind of structured the show a little bit more as a coaching call. He's younger than I am. I think he's right around 25. And he's doing some really, really cool things. He's, buying like one-off infill lots and selling those off or partnering with builders and doing that. And he wanted to grow his rental portfolio and grow a lot of the things he's doing. And funny story, we talk in here about private financing and having a better mindset on private financing. And the cool thing was most people come at this and they say, I got to pay lenders 10, 12%, 3 points, even if they're getting like private financing. And so they don't think that, we're the prize at this point. People are losing 4-5% to inflation a year sitting in the bank account with their money. They're not making that much money. Real estate seems to be a little bit more of a hedge against inflation, which I truly believe in because asset prices are raising. So if you can buy real estate, then you can't replace it for this X price or whatever because you have an asset that is already built. So I was talking to him about this and he texted me the other day and he said, hey, looks like I already have an investor on board to loan me cash, not collateralized against any particular asset at a reasonable rate. I wouldn't have even thought to do that if I hadn't spoken to you. So thank you. So that one call, this podcast you're going to listen to, helped change his perspective on private money, which then got him to give him money at a way better rate. And they're not collateralizing it. So if you don't know what that means they're not holding a deed of trust, first position deed of trust against any particular property. They're just doing it based on they're collateralizing it with him as the trust factor. And so he can move that money around from deal to deal to deal without having to change title, deed of trust, all those things. So pretty amazing. These things really, really work. And so a lot of this stuff is all mindset. Just because you think that as an investor, you would want 12% return doesn't mean Mr. Private Lender wants or needs 12% return. You have to remember who your audience is. So we're trying to grow a business and trying to make as much as we can. So we're always going to want the top end. They're hands off. They just want to make a safe, good return. So I think you're going to get a ton of value out of this show. Please give me some feedback. This was a random guy that hit me up off of Facebook or Instagram, and I engaged with him. I engaged with everybody who asked me questions. I give feedback and will answer their questions for them. But then I got him on the podcast as a kind of a coaching show. So I think you'll really enjoy this. He was a really good guy. So what's going on with me this week? Couple of really cool things, actually. This week has been really good. The last couple of weeks they were okay. We were traveling and kind of had some stuff happen. That's why we had a show that was missed that I just needed to take a step back for a minute. But this week we had a bunch of calls in the call center for people that come in the call center. Went 3 for 3 on Wednesday, 2 for 3 on Thursday. Really kind of got some clients, building some more clients back up into that business. And so that's really exciting. We're crushing it with our current clients. So we're going to fill back up here really quickly, and then we'll be able to expand some more after the fact. And then I am going today at 3:30. This is Friday, the day the show's being released, to go look at 25 plus unit multifamily building that came across from a relationship I had. And we're going to go present an offer. I just found out about it yesterday, went and drove the property, went and crunched some numbers, see where we're going to be. And I have an appointment with the sellers in their office and the guy that brought me into the deal today. And we're going to go see if we can get a price out of them that works for everybody. Also, we are going to be going mutual with a couple other partners I have on a different deal for a commercial property that we talked about. That's in a really good part of our town. It's expensive. It's $27 a square foot and it's about 1.6 acres just for the dirt. And so we're going to be putting some commercial there. I'm going to be a very minority partner, probably 10 to 25%, somewhere in there. I don't have as much cash as these guys. This building is going to be a $7 million building at the end of the day, but I am adding value. And this is what I talk about a bunch. This guy, my buddy that I have a relationship with, he said, hey, I want to buy this dirt. You're always asking me to come into your deals. Would you like to come in my deal with me? He was going to do it because he wanted to move his, he wants to put another restaurant. He owns a dozen or so restaurants. And so I'm like, yeah, I don't know what you need me for, but yeah, okay. He's like, no, I think you can add value. So I bring a builder in to talk, a builder developer that can build commercial, that we can get the price done probably at 2/3 of the price. So, because there's 30% margin, 35% margin that builders will mark up for commercial builds. So he'll do it at cost and he'll build in equity that way. We have already started talking to some tenants to lease out the other spots. So I am going to be making money. I will have to put some capital in, but I'll be making money and equity on a building because I connected the right people with the right deal. And I have been talking to this guy about coming in my deals for years. And so it shows you that you don't always have to be the one finding the deal or this. You just have to be a good person that people know. You have to add value to other people. And then you have to be true to your word and be an ethical person to work with because people want to work with you. So pretty cool week for me. 2 leads off of relationships that are going to be probably really, really cool and really good. So I think there's a lot of value to that. Anyway, so that's what's going on. Next week, I am going on a trip to Steamboat Springs, Colorado to go to the GoBundance men's retreat. There's going to be about 250 guys there. I am staying with some of my buddies at the hotel. Really excited. This is my first event with GoBundance. I'm making some fantastic relationships. If you don't know what GoBundance is, it's a men's group that focuses on pillars in your life, and it's not all about growing and making money. It's not all real estate guys, majority real estate guys, but not just fix and flip, but there's like commercial developers, there's apartment owners, there's guys that do private lending, there's guys that own businesses and companies and other kind of industries. There's doctors and lawyers and guys that are just growing. It's you have to have a 7-figure minimum net worth to get in there. And then it's 10 grand a year and then you have to pay for the trips. But Brandon Turner got me in. He's the one that told me to get in there. And so going to be hanging out with him and very excited about that because I've met some guys that I'm like, I think I'm doing a lot or I've done cool stuff. And I'm like, man, they just blow me out of the water. And so really, really looking forward to that. So hopefully I'll be able to get a show out next week if I can sneak away and kind of talk a little bit more about what I'm learning while I'm there. That's probably what the show will be about. What am I learning? Who am I meeting? Why do masterminds matter? I think if you're not in a mastermind, say you're newer and you don't have the 10 grand or 25 grand for these masterminds, the best mastermind that you could join is the Deal Finders Academy that Tucker runs. I've been in that since I started 6 months into the business. I have literally made my best friend in that group. I have made some of the best connections with people, and Tucker is always on the ball to help you ask questions, always responsive in the group. And it's $200 a month. Like, kill some of your services that you're paying for that you don't need and really look at getting in the Deal Finders Academy. I think there's just so much value in connections. It's unbelievable. I talked about it just a little bit earlier with the deals we're looking at, but I've also been able to connect other people in other parts of the country with other people that I've met, and then they've done deals together. And then so it's just, you want to know people around this country that are doing cool things, and then you can learn from them and have a community around you. So anyway, hope you guys get a ton of value out of this week's show. I actually really, really enjoyed it. I don't do any coaching, so that was kind of fun for me because sometimes I think I'm smart. My wife tells me I'm not most of the time, but I feel smart when I'm talking. And I will catch you guys next week, and we'll talk to you soon. Here's a word from the sponsor. What's going on, Real Dealz podcast listeners? I got a pretty interesting show for you today. I got Dan Haberkost on the show. He has sent me a Facebook message last week, randomly out of blue. It said, "Hey, I really like your show." He told me all the things I was doing wrong. And I'm like, well, why don't you come on the show? Why don't you come on the show? And we'll kind of break it down. He's 25, doing a lot of really cool stuff. Like I just read it as like what he's got going on right now. And so we're going to kind of do like a semi, like, who are you? And then like, I'm going to try to coach and give some feedback of like what I think might help him. I'm no genius in this level, but I've talked to a ton of guys in the business. So I think I have a good perspective. And I think he would really resonate with a lot of you guys out there in listener land, like the typical entrepreneur. If you're a lot like me, you're go, 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 not detail oriented. You're building this business. You're just pedal to the metal. And like, what do we need to do to put systems in place to protect ourselves from self-imploding? I think is kind of where this is going to go. And how do we actually build a business? So Dan, what's going on?
Elliot, I'm great, man. Thanks for having me on the show. And yeah, kind of contrary to what you said, I was telling you the things I like about your show and how it pushes me to be less of an amateur. Which is, I know you've talked about that time where you were playing a lot of golf and flipping a few houses, and then you made the decision to really make it a business. And I'm kind of at that stage myself where, I've been enjoying it, working part-time on the land and development and kind of doing a lot of what I want, which is more snowboarding and mountain biking, climbing, that sort of thing. But it's gotten more competitive. And if you're not systemized, if you don't have your business together, you won't last. So I'm working on changing that.
Yeah, agreed to all above. Maybe not the snowboarding, even though I like snowboarding, not really mountain biking, but yeah, same story. But you're 25, you're probably making good money, enjoying life. There's nothing wrong with that either. So,
Agreed. Yeah. Trying to keep that balance to some degree.
Yeah. Cause I'm I don't regret like the 3 years, 2.5, 3 years that Christy and I kind of just worked part-time and like went and golf, worked on our marriage. Sure. I won a club championship, which kind of like finally like released my golf ambitions, kind of like that inner drive of like, I have to like play golf and win something. And then when I won, I finally was like, okay, let's go do something else. Like I won, even though it's like a huge tournament, but it kind of, so there's, something about that. And there's nothing wrong. I think you go through ebbs and flows in this business life, right?
Sure. Yeah, absolutely. And for me, the big thing is to have this systemized and offload come December, because that's when snowboarding season starts. It's hands down my favorite hobby. So I'm going to be all over the Rocky Mountains come that time of year. So
nice.
This is the time
to make enough money so you can like helicopter in, so
now you want to see me get excited, we can talk about that. But yeah, absolutely. That's really the purpose of this all, right?
Yeah, exactly. Yeah. I mean, live within your means and go have fun and build a lifestyle that you can help people, provide housing, and make good money along the way.
Exactly. Yep.
So, all right. So why don't you tell me a little bit of what you're doing, what your business looks like, how long you've been in it, and kind of like what systems, like we'll probably get as detailed as you want, but like what systems you're currently doing, how you're getting deals, and kind of go down that road.
Okay. Yeah. I think a quick backstory is probably a good idea. So started in real estate actually when I was 16. I was managing a portfolio of properties for my boss at the time in a farm. Well, I was barely old enough to drive. I remember having to leave high school to go deal with tenant issues because my boss was abroad. And that experience taught me what sort of property I did not want to own and how not to manage rental properties. He was, in hindsight, really just a slumlord, and he had C- D+ properties. And he had a very negative confrontational dynamic with his tenants. So anyways, that taught me at a young age what not to do. Fast forward to college, I worked full-time while going to school full-time. And the last 2 years, I managed just about all aspects of the residential side of a landscaping company, which really taught me how to run businesses, manage people, sell while having 16 plus credit hours. And that was a lot of responsibility. So as I was getting towards finishing that up, I was about 20 years old, coming into the senior year of college. I thought, okay, when I'm done, what am I going to do with this extra time, with the skill set I've developed? And also, I was already making a middle-class salary as a 20-year-old. What can I do with this to accelerate my financial position going forward, being that I didn't have a whole lot of fun in college? And what stood out to me after doing some reading and talking to different people was real estate. Of course, I read Rich Dad, Poor Dad like just about everyone else. And long story short, ended up buying a duplex when I was 21 before I graduated. I was still in Ohio at the time where I grew up, but didn't want to stay there. Ended up moving to Colorado, get to today. And I have on the active side, a land and development business. On the passive side, I have 10 tenants between 4 properties, and I'm actively looking to buy a commercial building right now. So on the, go ahead.
Yeah. Talk to me about the development side. So you say, what are you doing on the development side? And
very simple. If I get an excellent lot at low cost with utilities, nice houses on both sides, somewhere where it'll be very easy to sell, we'll build a simple 3-bed, 2-bath on it. Because
you'll build it yourself.
I have general contractors that do it.
But you're building, you're building it out. You're not selling the lot.
Yeah, exactly. Yep. So the key there is finding the right land, and the markets I'm in are master subdivisions that failed 20, 30, 40 years ago and are now getting built out very quickly. So a lot of land guys do large acreage. I don't do any of that. It's all infill. And that has worked very, very well for me too, because I don't have a lot of competition. So to answer your question earlier, how do I go about getting the lots? Well, traditionally it's been just a simple, straightforward letter. Pretend Elliot owns a piece. Hey, Elliot, I see you own such and such property. I'll buy it for X amount. If interested, sign, return, and I'll get it closed in a couple weeks. So when people call me back, they're serious, right? They already know what I'm going to offer. There aren't a lot of tire kickers. I mean, I bought 85, 90% of the lots of the people that actually respond to me. And some of them just email or mail me the land offer letter. I send it to the title company and that's it. So there's little to no conversation with some of these people. So very easy. However, even land is getting crowded right now. So it's getting harder and I'm in a transition. 6 months ago, I could have told you it takes X amount of mailers to get a deal. Right now, it's a little bit harder for me to quantify that because it's in flux. And I'm getting cold calling set up too. So
you're getting cold calling set up?
Yep.
Nice.
Yep.
In-house or like are you doing, what kind of cold calling are you looking at doing?
I'm getting a VA that I've used for a number of different things, and she's done this for other people, and I'm going to see how that goes. Very low risk as far as the amount of money I have to invest. So we'll see what comes of that. Yeah, so it's getting a little bit or a lot harder to buy these parcels at 30 to 50 cents, which is my target range on the dollar. Even land is getting competitive. Now I'm adding some markets to where I'm at, and I'll see how much that helps if it's across the board. Where it's competitive everywhere, I'm not sure. But there's a market actually in Nevada that I just went out to and sending quite a few mailers to. It looks like I should have 2 deals locked up here tomorrow, or today or tomorrow in Nevada as well. So nice. That's where I'm at.
So, and you said you're doing cold calling, you're using PropStream to pull lists. So on the data side of it, we've tested against data like PropStream, IDI. Well, IDI is most of these guys. But Batch Leads, Lead Sherpa, all these guys, like our data is twice as accurate as these guys. So, and we're probably cheaper than they are as well. I've actually pulled lists from PropStream and stuff. Like you can pull their list. I think you go like 10,000 a month or something like that, 5 or 10,000 a month for like $100. That's fine if they're more accurate on the land stuff. I can still pull lists for you, but like maybe look at seeing if our data might work a little bit better for you. Also, especially if you're going to be doing cold calling. Also, if they're like doing sniper stuff, we have, and I'm not trying to sell services, but like we have, like, have you heard of TLO before? You know what TLO is?
No, what's that?
So it's like a deep skip trace, but we have one that's People Finder Pro. So you sign up, it's $19 a month, and then it's like 70 cents a skip, but you get like a full, like 40-person relatives, all their known addresses where they live, multiple phone numbers, age, everything but their social security number, basically. And
that would be really useful.
Yeah. So like on their super targeted stuff. So like, I'll show you, and everybody that's, you're kind of listening, along, you can kind of listen, but like, I just show you here, Finder. It's pretty cool in the sense of like, cause we used to use, it sounds like you're doing a lot more sniper stuff, like more targeted. You're really targeted on what you're going for.
I know my markets very well. Yeah.
And so like we like do a lot of sniper stuff as well. We'll run this like 200, 300 times a month. And just so we can get like super targeted, like I want to know everything about everybody, right? Like that's just like, we're doing a huge multifamily campaign right now. And so like, we're pulling like very accurate information. We want to know like where they live. We want to know how old they are. We want to know like their kids. If we can't get a hold of them, we want to call their kids. Are they alive? Are they dead? I guess
I can see that too being useful working on buying a commercial building here, narrowing down the ones I really would be interested in and using that service for those ones too.
Yep. So like here, I'll show you here. So like, here's my information here. So this is my old home phone number that I used to have. This is not mine, but this is my cell phone number that I currently have. This is my wife. This is my sister. This is my mom. This is my dad. This is my date of birth is in February, 32 years
Yeah.
old. I live here. Own that, own that, own that, own that. Right. You can do deeper runs. So like if I go to possible relatives, I can run more on here. So like the one cool thing about a possible relative, like my sister, we don't talk to her, but she changed her name from Abigail to Ashley. And I saw it in here a couple months ago that it was actually in here, that her name was actually in this system. Where was it? See, they still have it in here. Like, but like they get really good updated information. I don't know. It's in here somewhere, but whatever. So, and then you can get like you can see all the things like all the LLCs they own. If you do that, the comprehensive ones are more expensive. They're like $5, but you don't need all that stuff. But right here alone, you know, you have all these things. So say you want to search Christina. So just run another 70-person search because I want to get her phone numbers, right? Because I can't get a hold of Elliot. So then I'm going to pull Christina and I'm going to pull the wife and I'm going to get her phone number, right? And then I'm going to go after them. So.
Yeah, well, you know, there's a guy whose name I find on just, I mean, we're talking dozens, maybe over 100 pieces of land and some commercial buildings in one of the main markets I'm in. I looked him up, turned out he passed away. He was a big business owner. That would be a good person to use that for because it was a couple years ago. It looks like the estate still hasn't been settled to try and reach out to some of the family members or, you know, something like that.
We've chased like vacants and deceased, especially vacant lots. Like people might not know they might forget all about it and try to, you know, you sometimes like lots are sometimes hard to get accurate information on. So like dive in just a little bit deeper, like, and I'll give you an example. So we just bought a property. You probably maybe heard on the show a couple of weeks ago, maybe a month ago now, where it was vacant for like 5 years. We called them. My guy, Tony, called them and talked to him. They're like, we don't own that property anymore. We filed bankruptcy. We don't own that property anymore. The bank owns it. Tony's like, okay. And I'm like, no, like something's not right. Because they're still on title. So I went and pulled the title report, pulled everything. And then they're still on title. They're getting foreclosed on. They own it. They still own it. So we called them back and they're like, no, we don't own it. And I'm like, here's the deal. I'll give you a $200 dinner gift card just to, you know, I'm not making any promises, but I think you do own it. I think I can get you some money, right?
Sure.
And so $200, you don't have to sign any contracts with me or anything. I'm not making any promises. Go to dinner, just sign the loan payoff form. Let's go see if you really do own this. Well, sure enough, they freaking owned it. And so we ended up closing on it. They got like $8,000 for this deal. The loan payoff came in a little bit higher than I thought, but they $8,000 and I saved a foreclosure, right? Yeah. So now they can buy a house in a year where their credit's actually good now for some, but now they can buy a house now or in a year on a VA loan instead of 7. So help them all the way around. Well, when we got done, the guy said, I've had over 200 people call me. And like since they got posted at pre-foreclosure, like 15. Like, and I just tell them all the same thing and it's gone. Yep. But because we know to go a step further, right? That's the deal is if you go a step further, always, you know, you can get better deals and do things most people won't, right?
Yeah. Yeah. That makes a lot of sense. I mean, you're actually solving the problem, putting the time and effort to do that.
Okay. So you're going to expand markets. Do you like doing the single lot infill stuff like that? Or have you looked at doing tear downs or just only want to do that strategy or?
I like the land because it's so simple and it's a quick way to accelerate your income. So for now, as long as that continues to work and as long as there's this building boom, I don't see any reason not to do it. And because the goal is to scale the income, kind of as I alluded to in what I wrote, scale the income as much as I can to then move that to passive investments, right? So
why not do bigger subdivisions? Just because they're too challenging to go through all the rigor, all the loophole, all the city, all the permits, all that?
So you mean actually building or just taking that piece of land, doing the preliminary?
Yeah.
Go ahead.
Okay. So you can do it 3 different ways, right? You can take it, get under contract, pre-plot it, stamp it, sell it, right? You know, sign it. You can close on it, develop it, then sell lots, or you can build lots out, right? So you could do either the one, right?
So a friend of mine has done quite a bit of that, and he has told me many times I should be doing that. So at the end of the day, it's really just there's a learning curve, and I would have to market for that because right now I'm not marketing for those bigger pieces, and then I'd really just have to take the time to put together all the pieces of the puzzle and learn what I'm doing. But I do have the resources to do something like that within my network. I just haven't done it because the vacant lots have been working very, very well.
Cool. All right. And if they're working, you just had said that it's starting to slow down. And so like, how do we increase our tool belt a little bit, right?
Sure. So what I mean is it's getting more competitive to buy them. The demand for them is still very much there.
Yeah. but it's just harder to buy them, right? That's like,
exactly. Yeah.
but if you get them, you're doing really well.
Yep.
So what are you going to have your VA do? Like you're going to have her cold call, but like who is she? Is she going to cold call these landowners that didn't respond to your letter?
Yeah. So, I mean, she'll be cold calling the return mail, number one, but then number two, yeah, just cold calling everyone who I haven't heard from and seeing if they're interested in selling. And then I'm trying to set it up the same as with the land offer letter where she gives an idea of price. And that's what's nice about having these simple homogeneous subdivisions where the lots are the same for miles and miles. It's very easy to price. So she knows, okay, if it's this side of town, it's this. If it's that side of town, it's that price.
Gotcha. Where's she located?
She's in the Philippines.
How's her English?
Very good. She's very personable, friendly, and well-spoken.
Okay. How much of the culture does she know?
Culture, just from having talked to her the few times I have, I mean, I've had her do administrative stuff. She seems to be fairly Americanized, but to really answer that, I probably haven't talked to her quite enough to give you a good answer.
Yeah. So we've tested a ton on this. And like people call me and say, hey, Elliot, we want to use your call center for like multifamily stuff. We want to use it for like more targeted cold calling. And the Philippines people they work really well for like the machine gun approach, right? You know, I'm calling 3,000 to 7,000 people a day, single family houses. And, but sometimes they're doing like a 3.5 to 4.25 minute phone call, just getting basic information. But I found that like the call you're talking about, they might be getting basic information, but that's like usually like a 6 to 12 minute phone call because you want to build a little bit of rapport. Now, granted, you don't have a house to talk about, so it could be a little bit smaller, shorter time frame. But the US base tends to work better. We are testing some guys in Egypt one guy closed 32 deals in 6 months in Houston for a team.
Wow.
And so, and their English like is really good. Yeah. But it's the culture is always the thing that hangs you up, right? Because as soon as they figure out that you're like from a call center or they have this idea, like they have their croc brain. Like if you read Pitch Anything by Warren Claff, he talks about your croc brain of like something's trying to eat me always, or somebody's trying to take advantage of me. And so the thought is if that little bit of accent when they're trying to talk, it sometimes struggles to get there on this level of phone call. So I would try her for sure, but just have that in the back of your head of like, maybe you do some and she does some and to see if there's a difference. And then what Cole's done is he's hired like US based cold callers, like say a mom that, her kids are in school and she's on the East Coast and she wants to work for 6 hours a day, making calls, right? For $15 an hour. So just a thought process on that. But so like, what else are you struggling with? Cause it sounds like you're doing pretty well on your systems, like in your team.
Well, I think the biggest thing is offloading the acquisitions of the land. I don't want to call back the sellers or take those calls anymore. And I definitely don't want to deal with the making the transaction, just the administrative crap, right?
Why don't you want to be the guy taking the calls?
That's more of a forced thing for me. I can smile and grit my teeth and pretend I want to talk to those people, but I really don't. I have a really hard, just to be straightforward, building rapport, or let me backtrack. From every personality test I've taken, and from back when I was working at that landscaping company in college, that's where I became a little bit more self-aware because they had to tell me, hey, Dan, you're doing great with sales, but you're offending everyone in the office because I tend to be way too direct and to the point. I don't want to build rapport and I don't want to cherry coat it. I just want to get to the point. And so for me to have those tedious conversations, I mean, I can do it, but wow, I don't like it. So
I'm going to tell you really, okay. So it took me years to outsource kind of my like answering the phone calls and doing the phone. Like I like talking to people, a little bit different. I am very blunt and I get in trouble often for being too blunt, too quick. But I'm really good at building rapport really quickly. But there is a sense of like, if you're too friendly, then you're on the phone for too long and you're not going to be blunt about asking for the sales, right? So being blunt in your position is actually not a bad thing. The problem that we're running into in a couple different fronts is when I remove myself from that role. Now there is people that are better, like our sales guys that I could probably put there, but we're still in that middle. Like we don't want to be huge. We just want to be big enough. Right.
Yeah.
And so there's a point where I actually need to do some of that calling and that talking. But I think where it is the second or third call, right? Because I'm just better. And I like, the problem is it's really hard to find somebody that's going to move the needle like I will. Does that make sense?
Yeah, it does. It does. Yeah.
And the question you would ask yourself is, okay, if I go find a sales guy, I got to train him on land. I got to train him on the sales stuff. The question is, when's he going to go try to do it himself? Because he's going to see what I'm buying and selling these for. And so you got to find the perfect sales guy that doesn't save his money and blows his money, so that he's always going to want to work for you. Right.
Yeah.
And so, but if I can do, so like how we have it set up now is I don't take any of the incoming calls. I don't do any callbacks for the cold calls. But once it comes to a point, it works really well where like Tony gets him to a point and then he brings in the boss, right? And then I've already got pre-built in rapport and credibility because I'm the guy, right? Now, all of a sudden, you know, when you call a store, you're like, I need to talk to your manager. And all of a sudden you get the manager or the store owner and you respect them because they're the manager and the store owner, right? Automatically.
Yeah. Yep.
So they've already set me up as a position of strength. So now I'm in the driver's seat, and then I can have those conversations and I can be more direct and guide this into like, here's what we need to do. This is the fact, is the fact, is the fact. They listen to me better than somebody on the front end, right? Because they know I'm a decision maker. So being in that position and then being able to have that guy, maybe same guy, that once you tie it up, then you pass it back to that guy and he holds their hand through closing.
Yeah. And you know what, thinking through that, I'd be perfectly happy with that too, because that's eliminating most of what I don't want to do.
Correct. Because how I look at this is, if I'm a surgeon, right? What do I do? If I'm a heart surgeon, I literally see the patient. I plan out, here's what we need to do. I'm looking at the thing. I need to do this, this, and this. Okay. Tell the patient really quick, this is what we need to do, relay it to him or whatever. The nurse, the front desk checks them in. The nurse gets them set up. The anesthesiologist puts them to sleep. All I have to do is go in with my hands like this, somebody puts gloves on me. I go make my cuts, do what I'm really good at. They close them up. I leave. I'm done. Right. You still need the surgeon because he's the most important thing in that deal. But you don't need to do everything, right? So like, if you look at it that way, what is the thing that moves the needle the most? That is the most important thing that you can do. You do that because then you stay connected to the business as well. Okay.
Yeah, no, that gets me to think a little bit differently. And I wouldn't mind doing that at all. It's the coordinating of closing and the initial phone calls and the all the questions that I don't necessarily like, but
yeah, I hate it too. Or putting notes in Podio. I don't even like putting notes. Like I literally have a VA listen to my calls and put notes in Podio just for me.
Yep. Anything requiring too much sitting still or details, I struggle with. So I think
like a podcast.
Well, this is fun, actually. So this is the part I enjoy. I love meeting with other investors. I love talking to other people in the business. That part is the fun part for me.
You know why?
So I do. What'd you say?
You know why it's fun?
Because it tends to be people a lot like myself. I don't know why. What were you?
Because it moves the needle, right?
Oh, well, that
Your whole thought is it moves the needle. You're one relationship, one connection away from growing exponentially, right?
That's true. Yeah.
And so, like, talking to these sellers that are just tire kickers that right away, or you're like, this is never going to be a deal. I don't want to waste my time. Like, it's not moving the needle. But talking to another investor like your buddy that does subdivisions, that moves the needle, right?
Yeah. True. Yep.
So all right. So you got that. So you probably need the VA, and we'll see how the VA in the Philippines works. You need good phone numbers, good data. You're going to expand, sounds like, into some other markets, and you'll have to be the one that's kind of targeted, like go find them and then have a VA go scrub them, right? And pull the lists, pull the data for you. And then you got to find somebody that's like a Tony, right? That can be kind of play both sides. They can be really good at talking. They're really good at talking to people, really friendly, but they're also really good at sitting in front of a computer and building out the systems a little bit, making sure you're tracking the KPIs, making sure everything's getting done. So they're kind of a hybrid. They're not the best sales guy, but they're not that makes sense. Yeah. They're just a really good, they're like a relief pitcher, right? They're really good, coming in relief and handling things, but they're not starting, right?
Yeah.
And they're not closing either, right?
Yep.
So, So that's two people. And then you just need to figure out where you're at. And so then what then you talked earlier that you want to go after commercial as well.
Yeah, and I already am. So there's two buckets in my mind, right? There's the active business that produces the income, and then there's the more passive long-term buy and hold side. So that's in my mind. I kind of envision those two categories. I met with a seller yesterday, and this would be something I would buy and hold on. He owns a couple different commercial properties. To give you kind of a basic idea what they look like, they're a couple thousand square foot of office up front with 5,000 square foot of industrial in the back. Long-term national credit tenant. His lease was just short of triple net. There was like a small portion of the maintenance he had to handle, but they handled taxes, insurance. So looking at adding those to the long-term buy and hold, I don't want to buy more residential properties. Seeing much like where you're at in Pacific Northwest, we're going towards California very quickly. And I don't want to be providing the way things are going. Plus, just like land has been easier than, say, wholesaling houses because it's a lesser known asset, commercial, or specifically, mixed office and industrial, is that same way. I have a buddy who owns a bunch of Walgreens buildings, for example. Finding those niches and getting really good at them, there's much higher barrier to entry. But obviously, if you get over that barrier, then you get to benefit from it. So
perceived barrier of entry. Literally, we just went and got a loan for that 25 unit, and it was $1.5 million loan. Easiest loan we've ever done in our life.
Really? Well, that's a good thing to hear, because these residential loans are not easy.
No, like literally we did a $780,000 loan for an 8 unit. That was a friggin' pain in the ass, worse than a residential. Then we did $1.5 million loan with Freddie Mac. They just wanted our personal financial statements and to show our net worth was equal to or greater than the loan. And then everything else was based on the building.
Did you have someone in your group that had already gotten a loan from them, or no? Okay.
Nope.
Okay.
Nope.
Interesting.
And so really they just want to see that you have some operations experience though, as well. But so you sound like me in a good way, but the question, the one thing that I need is I need a leash, and I'm a visionary. Sure. I need an operator, right? An implementer.
Yeah.
Right.
Yeah. Yep.
Who's your implementer?
That's what I'm working on hiring right now.
Who's your person that's managing your rentals? Who's the one that's managing your payroll, your finances, making sure you have money so you can go do these loans because everything's organized and right there, and you're not running around because that's not the guy. You're not the guy sitting down there doing financial statements, right?
Yeah, that's what I need to find. I've gotten better just from a small amount of self-awareness at forcing myself to be organized on that side of thing, but it's not natural. I mean, I'm not the spreadsheet guy or the systems guy by any means.
Yeah, no, I get it. And there's nothing wrong with that. And that's the show that will probably air right before yours is the one I talk a lot about that. So that's my wife, right? She's the operations.
Yeah.
And really good at those things. The Tucker, more the CEO role, right?
Yeah.
The people that make sure like they make the hard decisions. They listen to all the ideas, but they're not like quick to make a decision and jump on this thing. I see a shiny object and I'm like, go squirrel.
Yeah. Oh, I get that. Yep.
Yeah. Tucker says I'm all gas, no brakes.
Yeah. Well, when you need to get something done, I bet you get things done quickly.
I do. When I'm fired up, I'm good. And that's why we can move the needle. That's why I talked earlier about moving the needle. So really quick, what is your plan for finding that person? Are you like hiring it? Do you going to go find a partner that is that? Like, what is that's probably an $80,000 a year job. So
I have a couple friends. Well, just in general, the way that I've been able to progress in everything is finding people who are way ahead of me and learning from them. So I have a buddy who's miles ahead of me in his business. And the way that he has a girl, he does wholesaling of houses just like you do. And then he also has a land business. He has one person running all of that. She started as the acquisitions manager for the wholesaling business and has been with him for years and now runs both those businesses and is an equity partner. So you got to start somewhere. And I just made this decision this week because, again, I got to do something. I'm going to start by hiring an acquisitions manager, as we were just kind of talking about, for the land business. And I mean, after this conversation, I think I'm going to
challenge you on that.
Okay. Go ahead.
Because remember we talked about you and I are acquisitions guys, right?
Yeah.
That's what we are. We're sales guys. At the end of the day, we're closers. We're closing deals, right?
Yes. Yeah.
You want to know what my bottom people finder or it's people finder, not people finder. It's my strength finder tests are. I'll show you.
Yeah.
And this is going to be what a good salesperson, acquisitions person should look like. My bottom is
I am testing these people. I'm using the culture index I was telling you about.
Okay. So context, restorative, discipline, consistency, deliberative, executing. Now let's go to my wife's, who is a very good operations manager, like somebody that you would want. I don't know if I have hers up, but she's very good. Here we go. So Chrissy, it's not her. Hers is right here. So her bottom ones are like all the sales things, right? And her top ones, though, futuristic, strategic thinking, maximizer, that's getting the most out of people, influence, relator, relationship building, individualization, and analytical. Like you need, like her stuff is executing. So like if you go hire somebody that's like you as a salesperson, they're going to be not good at the executing side, right? On managing, because that's what you need, right? Is you need somebody to manage your business, make sure you can grow. They need to, like, we're really good at getting ideas, but really shitty at building foundations. Because we build, like Brandon Turner talks about it all the time. It's you're building all these bridges to this island, and you don't finish the bridges, right? And so I would challenge you on finding an operator type person that maybe can blend a little bit, but could be an operator that actually could help you grow. And there's a really good book called Who Not How by I just started listening to it, but it's really talking about who is the person you need for this role, and then to go like to do these things that they're really good at, and go find that person, right? Because I'm really shitty at these things that she's really good at.
Yeah. Okay. What I was looking for in the test I was given, just so you know where I'm thinking, was a more organized, slightly less driver version of myself. So someone that's fairly social, that can do sales, but is a bit more organized. And the thought, as far as them not being a driver quite to the degree that I am, is more chance of them staying and not wanting to go off and do their own thing. Because I mean, I'm sure you're the same way, where you could never work for somebody else. I could never imagine working for somebody else. So not looking to have that quality in them.
Yeah, no, and this is like, I haven't heard of your test. That's why I really like the Strength Finder test. Is because you can pull that out really quickly on this. The idea, though, in my mind, and I'm not an expert hirer, right? But I've just seen a lot of businesses that, like, I'm a good number two. And I know that. So like you said, like, I could never go work for anybody else. Yeah, I don't want to go work for anybody else either. But I technically do work for my wife. And I technically do work for Tucker in the call center. Now we're partners, we're equal partners, but they're the boss at the end of the day.
Yeah.
Because they make level-headed decisions and see the whole playing field, when I see everything, either the sky is falling or sunshine and rainbows.
Okay. I will say I'm pretty unemotional. I'm pretty pragmatic most of the time. I don't really have much up and down. I've gotten pretty good at staying calm.
Okay. That's good. So, I mean, I think you try it, but I think, I don't know what your revenue looks like, and I don't know what all the needs of your business are, because it sounds like you need somebody that can take sales calls. Like that's kind of what it is. Like you probably have less like property management. You have less like team management, like managing employees, or less like this stuff to like keep somebody that's a $60,000 to $80,000 a year person busy. So they have to have some skills that go over to another side. So I think you can try but again, they can be that person like Tony that kind of can play both sides of the fence, right? They can be really friendly, like you said, with people, but they're not like a full on like closer sales guy. They can get them to this point, and then you come in and close them, and then it goes back to them because they're competent enough to manage the transaction all the way through.
And what is Tony in your business?
He's my sales manager.
Okay.
So, but he's probably like, what he could be is probably like a COO is probably in a business. Like when he grew up, like my vision for Tony is like, we're going after like bigger multifamily. We have land development, apartments, stuff like that. And the idea is I want him to get comfortable enough having communications with sellers so we can go after, and he can start conversations with sellers that own bigger properties. But then we can kind of work those leads together. But he's also really good at building out the operations, like the team side of it and training. And so like really good at building all that side of it. Like he can sit in front of a computer for 8 hours doing CRM stuff for a week straight. I couldn't, right? Like we had this thing, like we were talking about my Podio. We wanted to switch from Podio to a different CRM. And he was researching. And finally I'm like, dude, just make the Podio work for a while. We're just going to stick with it until my buddy gets his CRM done. And so he was learning how to build this thing, make it all better, moving this and that, organize this, all these things that I would never do. And then I pulled the trigger on switching CRM. So he's moving all the CRMs while he's training, callers and things like that.
Sure.
But he can also hop on the phone and talk to somebody for 30 minutes. But he's not good at selling.
Yeah.
Right. Like he can, but it's got to be the right person. But like his struggle is like, I can change who I am to different sellers, like be a chameleon. And like, I know how I can instantly, as soon as I'm talking to you, what type of person you are, what do I need to change? How do I need to talk? How do I need to do all these things? What is going to push their buttons? Do I need to go fast or slow? Right. He kind of stays the same. And so that's the stuff that you have to learn over time. But really good at building rapport, giving a really good name to our business. And then I come in, tell them how it is very bluntly, straight to the facts. Here's what we need to do, X, Y, Z. They trust me because they trust Tony and I'm the boss. Close the deal. Boom, done. He handles it through escrow.
Gotcha. Well, that sounds like a solid system. How long have you had him? I mean, have you had him for years or is he newer?
Like 6 months. He started working for me. He called me off the podcast and then he was moving to Florida, but he just wanted to learn real estate. So I'm like, how about this? Like, well, work part-time. Why don't you just go be like my lead reviver and go back and call all these old leads that we have? And so he started calling them, got some appointments, was doing well. And then he's like, hey, I'm moving to Florida. And I'm like, why don't you come work for me like 25 hours a week? I'll pay you like a base and a commission structure. And then, and kind of just went off from there. And so he's done really well, but the problem's been me because I started saying, again, everything's a nail and I want to freaking hit it. Right. I had an opportunity over here. So I have him going here. And then finally my wife stepped in and said, Elliot, focus.
Yeah.
So
well, that's good that you have that, especially in your spouse. That's pretty cool.
Yeah, it was good. It's good, but it wasn't for a while. It was very hard at first.
I can see that.
Yeah. Like getting that spot where like, I always wanted to be the boss and thought I was the boss, especially until I started working with Tucker on the call center. And then the more I've realized to let things go, like Chrissy took over, it was like a year ago, we bought this 24 unit and we had just bought it. We're like 3 weeks in. I had helped her do a couple things, but she's doing most of it for this turnover. And so we get on this call with our partners and she's like, I just take over the conversation and start saying all the stuff we're doing. And she's like, F you, I did 95% of that. Like, and she got mad. She's like, here's the deal. I'm going to do this. I'm going to plant my flag here. If I fail, I fail. If I win, I win, but just get away and let me do it. And I'm like, fine, I'm done with all rentals. You handle all the rental stuff. And she crushed it. So like, you just gotta like, I had to finally trust her as like a business owner and understanding like, cause she's different than I am in a lot of ways.
Sure.
And let go. I have an ego, right? I can't let go. And so, but she's done so good. And then working with Tucker, and when Cole and I would like have, if Cole and I agreed on stuff, Tucker would be like, all right, we're doing that. But if Cole and I disagreed, we both fight to the death. And then Tucker would say, we're doing this. And both of us were like, okay, it's over. It's done. Thanks. We're done. You know what I mean? So it learned like, so my wife will come in just a couple of weeks ago. She's like, hey, we need to stop doing X for a while until Y happens. And I'm like fighting. I'm like, no. She's like, okay, here's my opinion. And I'm like, she's like, and this is what we're doing. And I'm like, okay, good. Let's go. And like, that was like a huge moment for me.
Well, good. Better late,
Yeah. So, but you have to let go, right? It's who, not how, right? Who can be better, and you can't multiply, I guess.
Yeah, absolutely.
So yeah, I would really focus on like, what are you really good at? And like, just build your team around like just allowing you what you're really, really good at, whether you like it or not right now, like just do what you're really good at until you have enough revenue to like then replace yourself with somebody that can come in and replace you, who's really, really good at what you don't want to do. Right. But it's really, really hard to find somebody who's really, really good at closing deals.
Yeah. Well, so a couple thoughts. It is a little bit less of closing and a little bit more transactional on the land deals, because most of the time, if they're calling me, they're already agreeing to that price. They just want to make sure that I'm not a scam. So what is the key word, the buzzword? I say title company, Fidelity Title. Oh, have you bought a house, Elliot? Yeah. Oh, you remember when you closed at the title company? That tends to be the thing that immediately brings the guard down. And then also I just send them to the website where I have the houses and the development stuff, and I see that right away. So it is a little bit less skill required as far as closing to get a lot of these deals because they want to sell. They just want to know that it's actually the money's going to get to them and they're not getting scammed. Second thought I had when you said focus on what you're really good at, every week, especially this year, I have people offer me money and I'm not asking anyone for money. So I think in the long term, raising money is going to be the number one skill that comes to me easily, but got to find the assets to put that money into. So,
yeah. So what I started doing is a monthly Zoom call with like some doctors and lawyers and people that like want to like give me money. And so that's covered. Have you raised very much money before?
Just little stuff for specific deals.
Like just like what terms are you like raising money at and who you're raising it from?
So let's see, family, friends, a couple of them are people I've met at the real estate club. They'll put up the cash for some of the land deals and I give them a percentage of the profit. Or, I haven't taken money from most of the people who've offered. One of the rentals I bought with a partner and he put in almost all the cash. I found the deal and did most of the work. We're 50-50 partners. He and I are going to buy another one, similar sort of arrangement. So there's been a number of different setups, but far more people are asking if they have something they can give me it for than I haven't to take and put into an asset.
Yeah. Money is the easiest thing to get right now. So now let's talk about money. Okay.
Yeah.
This is where a lot of people I think struggle. So you just said you give the sellers like on these lots, you give them equity. How much equity are you giving them in the deal when they bring the money?
I've been giving them 20% lately of net after everything, which I know is too much. So anyways, working on that.
No, it's fine. I mean, I did deals like that. So yeah, I had a paradigm shift 3 or 4 years ago with my buddy, Mike Sumsky. And so Mike's got like 50 units, everything's basically owner carry unless he's refied out. And he's getting money from 3% to 7%, let's call it. And like, he'll buy some of these rentals and he doesn't even have to he can collect, like say he sells that property, they don't still get the money back for until the term's up. As long as he recollateralizes it. So, and then I have another buddy that's probably got $30 million raised with projects that they're doing. Half of it's probably around 4%. Doing construction stuff. Yeah. So the idea here is, what is there abundance of in the market?
Money and people looking for deals.
Exactly. What is there lacking of?
Deals with an adequate return. Yeah.
And operators, right? And good operators.
Yeah, and operators who can find them. Yeah. And operate them. Yeah.
So the idea here is, if when I go to raise money, the terms I set are what they are, right? Yeah. This is, so for instance, I just went and bought a piece of dirt to build a 13 unit on. Now this is an older lender that I have. She bought the whole thing, the loan to buy the whole piece of dirt, 7%. And she won't subordinate though. So I got to take her out with a different loan. But then I got a $500,000 loan to take her out from a guy at 8% to go build it. And then I'll go get a bank loan to build the rest, right? Non-recourse. Sure. Yeah. So, but then if I say I'm buying something with, so let's talk about that first. So if I'm a lender, like if you tell me 12% return, or a lot of these lenders, especially if your best lenders are always going to be people that like real estate or know real estate, have done real estate, right? Older people, those are going to be your better ones. You tell them a 12% return, they're going to be like, something's wrong here. That's too much. That's like high rate, high risk. It's hard money. Yeah. Well, yes, it's high. They associate high rate with high risk, right?
Exactly. Yep.
So if you go and the idea though is your whole goal with lenders is to keep their money working 12 months out of the year.
Yeah.
Because if you give them, if they say they give you, whatever amount of money for 12%, but you only work it 6 months out of the year, they only got a 6% annualized return.
Sure.
Right. Sure. So if I'm going to these lenders, I'm going to say, hey, lender, you need to keep your money out of the bank because you're losing 2% to inflation, actually more like 3 to 5%, right? Yeah. You're losing to inflation. I have this piece of dirt I'm taking down. Here's the deal. Here's all the things I have. We're offering 6% or even 7%, but you got to subordinate to the bank loan for the construction loan. right? But you can say I'll personally guarantee the 6%. You don't always have to do that, but when you first start doing loans with people, I always personally guarantee them, especially with older people. But like they'll do those deals. And then really what you just need to do is figure out your math. So I can't tell you if 20% of the deal is high or low, because if you take a typical deal and then you divide that by the loan amount, what it'd be, you can see what the percentage rate would be, right? And it could be very similar. You know, it just depends on like the deals, but you don't want to give upside equity on like these deals that are freaking juice, right?
Yeah. And that's one of the biggest things. So I just got a line of credit, a small one, but that it's at 4.9%, and that'll let me do two lots at a time with that. So that's a start in the right direction. And then plus I have a decent amount of cash right now, but just working on constantly driving that down. And I like what you said, because I think what you're implying is that some of these lenders, especially the more experienced ones, will almost feel more comfortable if I tell them a 6 to 8% return than if I was giving them more, because they associate it with high risk.
Yeah. So, and then the other thought is you don't need money. So the best time to find money is when you don't need money. Right. And so like I have lenders, I make a call and they'll say how much and when to, if I need it tomorrow, they'll wire it tomorrow. Right. Because they trust me. But the good lenders always keep their money working and say, hey, Mr. Lender, I might be at 6%. Johnny down the street might be 8%. But the goal is I have all these things in the pipeline. I'm going to roll you from this to this, to this, to this, to this. You might be a little bit lesser rate, but your money's always going to work, right? If you're with Johnny for 6 months out of the year, you're only getting a 4% return. So, and then the real idea with you at some point with your building is not collateralizing. So building rapport. And you might think, oh, nobody's going to do that. They'll freaking do it. Once you build enough rapport relationships, because you might use this money to take the dirt down, but then all of a sudden you can say you build enough equity or whatever, and you can refi the whole thing out with a construction loan. Well, but you have a dirt over here. You want to be able to just take that money and put it over here. Right. Yeah. So you build a rapport of like, hey, these guys trust me. They know that I'm not over leveraging. And if you're over leveraging yourself, you cannot ever do this. But, and this is like, you are running a good business, but you might not be collateralizing it. There's also people you can go that will just give you a line of credit that you just pay quarterly interest on. Say, hey, John, you got $250,000 sitting in the bank, or $1 million. I can work $1 million. How about you just give me a personal loan at 5%? I'll pay you quarterly interest. Now you got to be able to work that $1 million, but they get quarterly interest, your annualized interest of 5%, right? But you're paying it quarterly. It's just a quarterly payment, right? 5 to 7%. Then you can do whatever the hell you want with it. So
you got me thinking.
So, okay. So then let's talk about, now you were talking about buying commercial buildings, right? And raising money for commercial buildings. Now, and you talked about, you bought a deal with your buddy for 50, or this guy, he gets half the deal. You found the deal. You run the deal. He brings the money. Okay. You're being too generous on that. And I'll tell you why. So now, to getting started, there's nothing wrong with that. Please don't take that the wrong way. In my opinion, there's 3 parts to the deal, right? There's the deal, there's the money, and there's the operator. Technically. So if you bring all the money, you're probably getting a third of the deal. Okay. If I find it, I do everything else, you're probably getting a third of the deal, but you're bringing all the freaking capital. But like when I'm looking at raising money for the multifamily deals, basically investors that are just like passive investors, like they're a doctor, a lawyer, they got some cash sitting there.
He's a doctor.
Okay. They're just looking for a return. They just don't want that. You have to remember, they want to get a good, decent return, but they don't want to lose their money. They don't need to make a bunch more money. That's why he wants to stay in the buy and hold, because they don't want to pay more taxes. They're already paying too much in taxes anyway. Right.
Oh yeah.
So they're comfortable receiving a 6 to 8% cash on cash return annualized on the deal. Now, so like say I did this the other day with a deal, but we bought this 25 unit and I was offered my buddy to come in. He wanted to bring $100,000 in. And he's like, how much of the deal would that get me? I'm like, I don't know. I gotta go look at it. I'm going to go give you a 6 to 8% cash on cash return plus upside, right? Plus IRR. So I figured that we needed to raise 600,000. That was going to get him 10% of the deal, which was generous because I wanted to build a relationship. He would have got 11% cash on cash with interest only for the first 2 years. And then it would have gone to an 8% cash on cash on actuals. And his IRR would have been a lot higher because we bought that deal $700,000 with $700,000 of equity. So that 100,000 he gives me immediately turned to 170. If he didn't give it to me, we bought it, just me and a buddy, because it was actually too good of a deal. I didn't want anybody to come in. So, but so you build it around that, right? Yeah. I'm going to shoot to get you a 6 to 8% cash on cash return plus upside. So I'm going to go raise money for a commercial building, but I don't want to bring money in this deal, right? That's the idea. And so now you can give half the deal away if they're like bringing out like if it's a huge deal and they're bringing millions and millions of dollars, right? That's a little bit different. Like, like syndications will give 70% of the deal away to the LPs. Yep. Because they're raising so much. So this isn't like your, half $500,000 to $2 million deals.
Which is exactly in the range that I'm looking. Yeah.
Yeah. Okay. So they just want a safe and secure return. And that's really it. And they don't want to have to worry about it. Right.
Yeah. Yeah.
So yeah, people always think, especially since we're investors, because we want to get huge returns, right? That's what our goal is. You have to take it out of your brain of what you want. Like I wouldn't do it for a 6 to 8% return. Well, you're not a freaking doctor that's making $300,000 a year. There's not many places to put your money, right? Yeah. You're the prize at the end of the day. Now markets will change and maybe we won't be the prize at some point, but right now we are.
Yeah. Yeah. That's a great point. Not thinking that it's the same thing with talking to sellers. You shouldn't assume that your frame of reference or what's important to you is the same for that person, that lender, that seller, whatever. That's why you get to talk to them. So yeah, that's a great point. And I will keep that in mind and think through how I structure this deal now.
You just need to think about it when you're talking to people. Like I'm valuable here, right? They want what I have. I have 10 guys that have what they have. They only have one guy that has what I have.
Yeah. And that's especially true right now. Yep.
Correct. So here's the deal. Like my buddies will just send out to 3 guys. Here's the offer. Does anybody want to give me money? Here's what I'm offering. Yeah. And, or one phone call once you start building relationships, like, here's what I offer. Like one of my lenders charged one of my buddies. I let him use them 12% in a point. And the guy loans me money. He charges me 8%, no points. But that's just the way it is. But I look after his money like it's my parents' money. And so you also have to show them like that you have to build that trust with these guys of like, I treat your money like it's my grandma's money. Sure. And it's their last $100,000. Yeah. Yeah. Well, I mean, I absolutely. That's rule number 1 is you don't lose money. Yeah. Or you're willing to sell everything off if you did. Yeah. Yeah. Like the worst thing, but the best thing that could ever happen is you have a deal go south and you have a couple of investors in there and you pay them back all their money plus interest after you've lost money and the deal went south. You will never, ever, ever ask for money again for the rest of your life. That's what I was going to say. They'll stick with you forever. Yeah. You will never, ever ask for money. Yeah. It's like, you don't want that to happen. But like, if that happened and I had to sell things to like pay them their money, you would never ask for money again. Yeah, that's a good point. That's a good point. Okay. So, yeah, I think you got a lot of really cool stuff going. I think just a couple of thoughts of like, one, you're just 25. So like, give yourself some grace too. Sure. It sounds like you do enjoy life and have fun, but life's short. Well, I've gotten better at that because I didn't for a long time. But yeah, no, I made it, like last winter, Wednesdays I'd go snowboarding. It did not matter what was going on in the business. I said, no, every Wednesday I'm going to go snowboarding. And so I kept to that. Definitely got better at that over time because I did not used to do that. I can be a workaholic if I'm not careful. Yeah, you and me both. So yeah, give yourself, grace, make sure you're enjoying life, work on hiring that person. Sounds like you got cash and money. So do that. We can help, with the list and data and that stuff, but then really just narrow down like what you're really good at that you can move the needle. And just like my goal right now is closing deals and raising capital. I'm a connector, right? I need to connect this deal with this person and have this operator run it. Right. I don't need to know how to put streets in. I don't need to know how to build apartment buildings. I don't need how to manage apartment buildings. I just need to know what a decent deal looks like and how to raise money. Yeah. Well, I think there's a lot of similarities there because I mean, I know how to build a house as far as the basics, but the general contractors I use are the ones that really know what they're doing. And it's just a matter of putting the right contractor with the right lot along with the money to finance the build. So same concept. It's just you're doing it on a bigger level. So
Yeah, same sort of thing over here.
What about just partnering with a builder, or like you just go focus on getting lots?
Yeah, that's an option too. And honestly, just flipping of the land can be a business in and of itself. And with everything that's gone on with material prices and just some of the frustration I've had with general contractors, probably am going to continue to focus more on just buying and selling the land, because that's endless. That can be a business in and of itself if you do it properly.
Yeah, and it's safe too. Like,
yes,
the whole idea, like if you can go plot 10 to 50 lot subdivisions, get them through pre-plat before closing, and then you go call up regional builder or a guy that could take all 10 lots or all of them down. They're basically paying 95 cents on the dollar for what end lot sales cost is.
Yeah,
I was retail for end lot price. They'll pay like 90 cents, 95 cents on the dollar.
Yep. Yeah, I was looking at a large tract of land to do that with a couple of weeks ago. But a big issue down here and in this part of the country, obviously, is water. And it turned out the municipality is completely out of available water. They have allocated all the remaining taps. So just if you're looking at land anywhere in the country, make sure you talk to someone who understands the subtleties of your market, because that's certainly not an issue where I grew up in Ohio. There's a swamp back there. But over here, yeah, we don't have much water.
We just had we were looking at a piece of dirt, and the Kennewick irrigation district's like, we don't have any more water to allocate. I'm like, what the hell do you mean you don't have any water? Well, they turned us down such and such years ago. I'm like, the water's all around. They're like, no, we're out of allocation.
Yeah. Yeah. The big metros dominated around here, Denver, Colorado Springs. This was in the market directly south of the Springs. And yeah, they are out of water. So
nice. I'm actually going to be in Steamboat in a couple of weeks.
Oh, really? What are you doing up there?
The GoBundance, your trip, gotcha. Summer trip. Yeah.
Yeah. Yeah, that would be cool. I will have to look into that once I hit the $1 million mark. Better hurry up.
Yeah, no, you'll be good, dude. You're you're gonna be there before you know it. You'll be there by the end of the year.
That was the goal. So honestly, 25. The goal has always been before I turn 26 to be a millionaire. So I've got till next April. Yeah,
my goal is 30 because I didn't start until I was about your age, 26, 27. Mm-hmm. My goal is 30, and then we hit it like 29 and a half, and then now it's just like seems like a hockey stick.
Yeah. That's how this goes. They always say the first million's the hardest.
Yeah. And then just one piece of advice, because I struggle with this as well, is, try to put blinders on as best you can. Like just blinders on of like what other people are doing, because it's so easy to see like this guy's making money, or I'm sucking because this guy's better and this guy's doing better. Like I really try to put blinders on, and it's so hard to do.
Yeah.
But just, talking to people who are like, you seem like you're like me in a lot of ways. You go find the guy that's 2 steps ahead of you. Then you're like, I'm going to go add value to him. Like I always talk about, and like, cause I want to learn what he has.
Exactly. Yep.
Yeah. So like, and just make sure
it's building genuine friendships over time.
Correct. Yeah. Genuine friendships, but in a sense of like, I want to know you.
Yeah.
I want to be your friend, and I'm going to go add value to you in some way, whether it's, I've taken guys, bring cars to the shops and gone and picked them back up. I've gone and done deliveries. I've gone and taken pictures of properties for people, Yeah.
Can I tell you a quick story?
Yeah, I'd love to.
In regards to that? Yeah. Okay. So when I first moved to Colorado, so this was 2018, I'd been here for about a week. I went to the local real estate investors club that I now host, and a guy stands up. He goes, "Hey guys, I've been in the business 40, 45 years. I've built all over the world, buying and selling every sort of asset within the real estate world you can imagine, notes, etc." It was very clear this guy had done everything I wanted to learn. And he goes, "I need help in my business, more on the technology side. I don't want to deal with that. Come and help me, and I'll teach you what I know." So of course, everyone gathered around him, as you'd expect. He gave his phone number to everyone. 2 people called him, myself and one other. Out of those 2 people, the other guy went down there one time because he's about an hour. He lives about an hour south here of the Springs. And then I stuck with him for months, almost a year. It took almost a year before I made any money. But very quickly, I realized this is someone who knows everything I want to know, because he showed me an apartment building he built in China. Like that's crazy. So anyways, fast forward to today, he's a lifelong friend. He lends, he introduced me, helps me in any way he can. So building those genuine relationships over time, especially if you're new, is so important. But don't be the person that walks up to someone you never met or goes on a social media and says, "Hey, will you mentor me?" Because that will not get you what you want.
Yeah, it's funny that you say that about only 2 people took it up and 1 person follows through. I have 2 interns working for me right now, but through the call center, all people that will call in and be like, hey, I'm doing real estate, but like they're not ready for the call center yet. And I'm like,
Sure.
you go do this, this, and this. And I try to gear it towards how much time they have during the week. And you do this for 2 months, call me back and I'll give you another free hour of coaching and like help you and answer any questions. 1 person. I've told that to 30 people, 1 person.
That's crazy. Cause a lot of people that find real estate, they think it's just a get rich quick scheme and they don't have to do anything work or do anything difficult. And then they find out they have to work and they disappear. It's just like at the real estate club, people show up saying they're going to be a wholesaler all the time. And then they're gone in a week or 2. They hear it's no and low money. So they think great, but then they find out you're going to get told to F off a bunch of times and it's a little bit uncomfortable. So yeah.
Yeah, I agree. And that's why like everybody's like, oh, it's so big. There's so many people. There's so much competition. There's really not. There really isn't competition. You just make it up in your mind because most people don't do what it's necessary. Like that deal I talked about, 200 people have called him.
Yeah.
200 people called him because they won't put the full effort in or don't understand. And they also don't study and try to learn real estate.
Yep. No,
cool.
That's so true.
Cool, man. I'm excited. Glad to have met you. Thanks for reaching out. Hopefully this came off. Hopefully this helped you in some ways.
Yeah, it definitely got me thinking.
Cool. Hopefully, hopefully I'm not a coach. Nobody pays me for coaching, so I'm not as good as Tucker is, but I think I got some pretty good, hopefully sometimes some decent ideas on how to run a business.
Yeah, absolutely. Especially on the lending, because that's a great point, and I'm giving far too much away and using too much of my own money at this point, probably too, when there's endless capital out there.
Yeah, I'll challenge you on that though.
Okay.
I like using my own money.
Okay. And why? What's the reason? Yeah.
And people are going to argue with you on this lending because why would I give somebody 8% when I have money losing 4% in my bank?
Mm-hmm.
Right. So I don't want to use all my money because I need available capital to run a business. But why would I go like for this 25 unit that we went and bought with my buddy 50-50 and he put half the cash in and I put half the cash in basically.
Yeah.
And it's like, why would I go? I could go raise money for that. But like, then I'm giving up $700,000 in equity. So $350,000 on my side, I'm giving up equity in that. I think this is a good asset. Now when I'm out of cash, sure, I'll go raise money. But for I want to keep my money working as well because it does me no good sitting in my bank account.
Sure.
Right.
And what you just described on that apartment is exactly how I'm going to structure this commercial buy.
Yeah. Yeah. So use your money as much as you can without like tapping you, but it does, no good sitting in the bank account. Really, you're losing 4% just like they are. So, but using that dollar to leverage more dollars, is a good thing.
Sure. Okay. Well, I'll keep that in mind too.
Cool. Awesome. Dan, that was so fun. Thanks for coming on the show. I appreciate it.
Likewise. Thanks for having me, Elliot. It was great talking to you.
Yeah. It's